So I've been using Vanguard for over 4 years for my pension and also general investment. The plan is today to go through a lot of different index funds for you using Vanguard for beginners. I do use other apps, but we're going to focus on this one today. Vanguard has been around since the 1st of May 1975. It's been around the longest, and it's also, even today, one of the cheapest ways to get involved in index funds. 0.09% ratio on cost. Very low. But if you do like index funds and you are using Vanguard, please do leave a like on this video and also comment which one is your favorite. So let me explain what an index fund is, just so you're fully aware. I'm going to use a bowl of rice. So we've got a bowl, we've got rice, right? Each individual bit of rice, whoopsie, dropped it. Each individual bit of rice, if you can see that, is quite literally a stock, right? So imagine the bowl as an index. All your individual grains of rice are stocks plonked in it. Now, if you're having something like maybe egg fried rice or something, I don't know, that could be known as a bond. Or if you're a little bit colourful and you like some random stuff in there, different types of sectors, right? So it's all in one for you to manage. We're going to look at the pros and cons because I think for everyone, an index fund is pretty awesome, but for some people, there may not be. So when we talk about investing, this is a fantastic book. This is wrote by the founder of Vanguard, and the pros and the cons are all the same sort of elements to them within the common sense of investing, the full module of what you need to do as an investor. Now let's look at some of these pros. So the first one is minimizing your time spent on picking funds and individual stocks. It's all done for you, all in one place, very, very easy with a very, very long history track record for you to track performance. You can invest with less risk because an index fund is a calculation of many different stocks in many different sectors. If one has a bad day, it's not going to affect you. So bear that in mind for risk appetite. Another element that is also a pro here is the instrument. You may be in stocks, you may be in property, and you may also be in bonds. You can have a flavor and a blend of each different one. So you're not fully exposed to one market, you've got a mixture of all in one place. It's less expensive than going to a fund manager on your high street and getting them to pick stocks for you. It's all incorporated in the cost. And on the website, when I show you them, you can see each individual fund has a cost. You also pay less taxes, which is a good thing. If you're doing it in a self-investment pension, less taxes. If you're doing it in an ISA, less taxes. All those profits that you get in accumulation on these funds, no tax on those ones. Really, really helpful. It's also a lot easier to stick to your investment plan. You can put a monthly standing order into Vanguard, into these funds, and calculate it going forward into the future and dollar cost average into these funds at any point. So into the cons. One of the biggest one is the obvious one. You will not beat the market, right? It will be a lot harder for you to do that with an index fund. However, that trade-off with risk is kind of required in my opinion. If you go into my link below on my Patreon, I do a dividend portfolio. I've got a 7.2% yield on that. On these index funds, you're never going to get anywhere near that. So sometimes individual stocks isn't a bad thing versus, the indexes itself, but everyone is different. You also have no loss protection. Why? Because if the whole market tanks, then you're going to probably suffer. However, if you're in some individual stocks, yes, you will suffer, but they may not be as bad. So bear in mind for the overall index, there's a pro in here, there's also a con in here. Remember that. And finally, you won't always like all the stocks that you've got. If you're against tobacco, for example, or alcohol, whatever, you may actually be holding that within your index fund. So let's head over to the screen. These are 5 index funds that I really like. 2 of them I am actually in. 3 of them are pretty damn awesome anyways in terms of what they offer. So if you go on to vanguardinvesting.co.uk or .com, depending where you are in the world, it's a very, very easy website to use. If you go to what we offer and then into index and active funds, you will get a full page of information. How to build your portfolio, manage your own, ready-made ones, all kinds of good stuff. They're all here. But what we're going to do here, we're going to pinpoint the ones that should be on your mind for a beginner. So the first one is the main one that they actually have is the 80% equity fund LifeStrategy. Now you can have 100% on this as well, but sometimes it's good for the diversification elements of it and having a little bit less risk. You can pick accumulation or income. Okay, very, very straightforward one. It reinvests, so it compounds, or the other one, it will give you cash. Personally, I always go for accumulation for obvious reasons. Now, in terms of how this all works, you can see the price, you can see the equity kind of element. So you can have, if you go 100% equity, it'll be 100% stocks. Some of these do have bonds, and the charge is relatively expensive, these ones, but these are a lot of funds. Now, how did these ones work versus the other ones I'll show you is these are a lot of different Vanguard funds all squashed into one. So if you go into likes of Morningstar, you can see how the kind of are put together. But if you scroll down, you can see all the sectors. And then if you scroll down even more, you can see all the different holdings that they have. So they're all Vanguard funds. But for me, LifeStrategy ones, really good. Depends on your risk appetite. If you want to go 20%, 40%, 60%, 80%, or even 100% equity, it's entirely up to you, right? So the next one, and probably the most obvious one for most people, is the VUSA. This is the top 500 stocks in America, the S&P 500. Obvious, right? For me, a fantastic one to look at. $27.8 billion of assets within this fund. Now, as I said before, individual stocks. Pretty good, right? Now, this, again, go into Morningstar, you can see the equity side of it, all stocks. And what's in them? Well, there you go. The weight. Higher the stock, more interest he is, for obvious reasons. So if Apple has a bad day, your S&P fund might be having a bad day. By the way, today, earnings day for Apple, if you're wondering. So it could be very, very interesting. And Amazon, funny enough. So very, very interesting day today happening. But this is how you find out what's in them. So on every single one, just go onto Morningstar, put it in, and you will find very, very easily what is actually in your stock portfolio. But yeah, for me, VUSA, really, really good one to have. Pretty solid. I've been using this one for a while. Had pretty good returns over the last few years. Obviously, not the greatest so far for obvious reasons, but you can see the idea. You can get some decent returns percentage-wise. Pretty awesome, right? The next one, and another kind of obvious one, is the US Equity Index Fund. All the stocks in America, right? Again, a very, very dominant market. And you can see there's 3,918 stocks within this, right? Risk factor of 6. Look at the charge. Very, very low in cost. Pretty damn awesome. But as you can see, a decent amount of money in this one as well. And you can see how the growth of this over time has done very well as the markets have increased. Obviously, inflation will matter on there as well. But you can see again, very, very good, solid results over the course of the last few years, even during the pandemic. So again, another good one to look at. Accumulation, not too bad. In terms of distribution, I mentioned before, with my Patreon, I've got my own individual UK stocks. Yeah, they're not the greatest for dividends, but it reinvests over time. So it will grow over time. The other one, and another obvious one, is dividends. Just mentioned it before. If you want something that is going to be more of an accumulation one and a bit faster, yes, the fees are a little bit more expensive, but distribution on these, much higher, 3.73%. So maybe worth looking at this one, but obviously if you are on the S&P 500 and stuff like that, you're going to get the distribution anyways because not all of them, but majority of those stocks do pay out dividends. This one is focusing on high dividend yield stocks all around the world. So you get UK ones in here, you'll get Japanese, you'll get the US, Canadian, all kinds of random stuff in here as a nice distribution because it is the world, which is good, but it also stocks, real estate trusts as well, and emerging markets. So a little bit more risk, but the reward might be more and more passive income that will go into your fund again and compound it, which does make sense, right? And the final one, and kind of obvious, the FTSE Global All Cap Index Fund. This is everything. All of the companies in the world, large, medium, small company shares, as well as some distributions in there as well. Again, not massively high, but distribution nonetheless. This one is probably the most diverse in terms of like the obvious of there's so many in here. The risk appetite is a little bit lower, but you can see there's $1.9 billion in here. Not as mental on the growth, but nowhere near as much downside versus the other one. So bear that in mind. So there's a lot of different ones. For me, always go accumulation. Sometimes, yes, you can move it to income if you've got a lot and you want to live off those kind of that cash flow. But if you're building, just accumulate. I love doing this for the obvious reasons of pensions in the UK. I can get money back, tax relief, which is awesome. And most importantly, the obvious one, ISAs. You can make money off these and not pay taxes, which is pretty good up until a certain point. You are limited on how much you can put in, but it makes sense. So there we go. If you enjoyed this video, leave a like. If you are involved in index funds, let me know which ones you like. If you want me to cover more, I will. And yeah, enjoy.